Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100 on Sunday, June 11th, 2023. Today, I am going to make the big picture update again on the futures market. So that'll be on the ES and the NQ. I'm beginning with the S&P 500. I'm going to take a look here at the weekly chart to see that we still in progress to finishing up what I continue to count as a primary B wave. And within it, we are continuing to be inside of that in terms of being in an intermediate C wave up. It does still appear that we're going to be reaching completion. And to add on to that, we're getting information or just, headlines from the news on that it's official. We're in a new bull market. What does that mean? Where are we going? How does it head? But then I want to just add, because I'm going to keep this technical, I want to just add that underneath all of that, I did also notice an article from an analyst saying it may be very short-lived. So in other words, today I'm reading here just in the news section, because I continue to get the news stories. And one of the stories was that this is the shortest bear market. Get this, the shortest bear market since 1948. I'm like, okay, how can we confuse people? How can we confuse people to say that we're in a new bull market when we have such a state of affairs within the economy, within the Fed, within the banking sector, within all of these different sectors? Yes, people, it can truly be a very short-lived bull market, even shorter than anything on record. Now, putting that aside, let's take a look at the technicals. Again, here on the weekly chart, we continue to show that we are moving higher. And I suspect that this news is going to bring out even more in terms of what we can come through. So what am I looking at here? This is the 4-hour chart. And on the 4-hour chart on an Elliott basis, I've been counting a primary fifth wave, a minor fifth wave. It's a primary B wave. Excuse me for that very severe slip of the tongue there. So we're in a minor fifth wave to complete this move. And within it, it continues to appear that it is going to be likely a triangle, a diagonal triangle. So let me just first put in the boundaries or the trend lines for that triangle pattern. Here we're going to go to connect it to that third wave. We're going to go from the bottom of wave 2, and we're going to connect that to what I am considering wave 4. Now, so you can still see that we are getting that diagonal in. But if this is the case, so in other words, if we actually have come through and finished with wave 4, and that would have been at last Wednesday's lows, then we're pretty dang close, because what we've got going on inside of the minute fifth is 1, 2, heart of 3. So we have our upper boundaries here at 43.30, and we can just ride this up, 32, 33. We can see it continues to rise up, depending on how long we waffle around here before actually starting to go. Now, I also can look at this and say, well, we got A, B, and we're still going to get a C wave down, which again could bring us back down below 4,300, but we need to respect now this boundary. But that boundary could expand to the downside if wave 4 is not over. And what I mean by that is this moves itself lower, because it would not signify that low, the June 7th low was the completion point for wave 4. So we still have room for that to occur first before we get that final wave up. Now, what else can I add to the chart? We can start putting on some fibs. And the first fib that I want to put on would be on a minor degree. And I can go right from here. Nope, I actually got to go out a little bit. Let me see if I can pull that back in. I can. we're going to go for a minor fifth wave. And where's our comparison going to come in? The comparison comes in because we take a look at wave 1 as wave 5 is compared to wave 1. In this case, right here is minor wave 1. So I'm going to start to put my fibs in place, and I'm going to use extensions, and I bring it over here and put it right there at the bottom of the 4th wave. So what we have going on is the first one up that we use is that wave 5 is equal to wave 1, so or equality, and that equality will come in at 100%. We've already exceeded that. Now we've exceeded it, gone below, gone way below, come back up, went up, come below, and now we're back up above and actually closed above that now, and that is at 42.9394. So that kind of remains, but what comes next? Now on just a fib basis, so Fibonacci Elliott basis, what would come next is 0.618, but that's all the way down here, so that's already been eliminated. So what comes after is 1.618. Where does that sit? Way up here at 44.40. Now, what could create that? And would it break this triangle pattern? Well, it would, but we have still, if we can just get the 3-leg in, then it would still withhold it, even though it could overshoot that upside picture. So let me come back down to the hourly chart, and let's see if we can't take a look inside. So we're taking a look inside. We see we have a very nice ABC, but then we get this going. So it still could be an ABC, irregular 4. We want to make a new high above wave 3, in irregular 4, right? Where the C wave or the 4th wave comes in and makes a new high above that previous high, and then still comes down and pushes itself below 42.62 to finish wave 4. That remains. If not, and I'm going to go, then we're pretty close to building this final leg. So where does our resistance start to come into? If I had to use again, I'm going to add one more layer. And I know there's some of you who think, oh, there's so many lines on the chart. What nonsense. Not really. So I got one more that I'm going to add, and then see if we can get some overlap here. And that's going to be that minute. Indeed, this is to say, if wave 4 completed right here. 0.618, 43.32. It absolutely goes with the current parameter, the current trend line for this diagonal triangle. Right on the nose, it would hit it at 43.32. That's 0.618. Where's equality? 43.76. Where's 1.618? Again, up in that neighborhood of 44.36 to 38. That's 1.618 there. Here's 1.618 of minute 5. So we have these levels that continue to just, we can now hold on to. Whether this comes back down and then shoots back up, we'll adjust that one level, but we still have our other levels. So that completes, really. So what can we expect maybe coming into tomorrow? Well, either we're going to continue to go up now that all this news, the shortest bear market, we're all into the bull market stuff. It could just push to it and get it done. We still are going to be on wait and hold to see what the Fed's decision is. The Fed's decision going to back up this? We're in a new bull market, or is it going to kill it before it even really begins? So a lot that we need to think about. Moving over, and let's take a look at the NASDAQ, which is actually in the same, not in a triangle pattern, but in a finishing pattern. And here as well, we have 1, 2, 3, 4, 5. So that could be minute wave 1, and we still have quite a bit of upside to do. These out here are, I believe, I need to just go out to my 4-hour chart, and I can see that what we have on these are the primary B wave levels. Primary wave B would be equal to 70.5% of a retracement of that cycle A wave, and that comes in at 14,914. Definitely could be there. So let's go back down, and what do we want to add next? Well, if we have to, we now want to add again primary wave, excuse me, I keep saying that, minor wave 5 as it's compared to minor wave 1. And those levels come in. We'll go back down to the hourly chart, and now we can see them. We have a 50%. Again, we're sitting right below 14,900. That works. 618, 15,050. And then if we had to go to equality, 15,539. Now that's minor wave 5. So again, we've not really even reached a level where I can start putting in a minute wave. So we can only go on this. Could it be complete here? Well, it depends on this pattern that we're in. How's it going to build? I have to give it more room because right now it truly can only just be taken as this is 1, 2, 1 of 3, 2 of 3, 3 of 3, 4, 5. So it's still, we have upside left to do. So I'm going to continue to put that into my focus and see if it all, what comes next, basically. And so I'm going to rely on my fib. So right now, what we have is some resistance at 14,748. Now I can probably start to draw some on my hourly chart in terms of what does this all really turn out to be coming up here. It is confusing. I will give you that. So even if I had to say 1, 2, 3, because this is really coming down too far. So this have to be 3 and this is a 4. So again, are we now doing another diagonal, but it's now going to be in that 5th wave position? So is this 1, 2, 3, 4, and a 5? That's also a possibility. So again, we're going to have to go on an intraday fibs that you can build in as the market starts to move. For example, if indeed we're now forming, this is A, B, C of wave 1, then we're looking for a wave 2 pullback, which is going to be an A, B, C coming down. So first thing I can do, and this is what you also can do when you're trying to put together, where are we, what can we do? You can look at your own. You can put them in there and you can see, well, if the market should come down to 0.618 and we're doing a wave 2 and it comes into as an ABC, well, then we have 14,423 as support. We have 14,385 as support. We have our moving averages as support. And then we see if it holds and what the next structure is going to appear as. We understand coming in that we still have additional upside before this larger sequence is down. So now we have to bring it down to the day-to-day. We still know that we have a major decision that's going to either rock or build on what we're doing right now. It's either going to rock it to its core if they come on, and instead of pausing or doing whatever else they're expecting, the opposite happens and they do raise 25 basis points or more. So keep all of this in mind, because what I hear and what people say, oh no, the market for sure, any of that I just dismiss. The market for sure stuff just doesn't exist. There are too many givens, there are too many possibilities. So I would rather just go, here's something for the upside and for the downside, and this is what I'm going to build on going in either direction. So we know that the S&P and the NASDAQ both are showing us that we still have additional upside to do for that larger sequence that's in progress. But on the interim, we could drop back down tomorrow morning, or even on tomorrow during the whole day, rally again on Tuesday, and then rally or just sit still until Wednesday, when that decision will be made. Now, in the process between tomorrow or even today's Globex and Wednesday's announcement, we get up towards that upside resistance levels, and the pattern is showing more of a complete picture. It's going to help us really kind of realize a few things. Now, all of this can continue to extend, so please don't get me wrong. But I am not on board with it's a new bull market. I know technically that's how it's been called, but that is not something that I adhere to right now. In any case, I'm going to wrap it up right there. I'm going to leave it there because this is just a technical. Also going in, we have RSI that does show we could pull back a little bit more. That's on my hourly chart. Moving averages, they're kind of flat. You know, got the 200, the 50s kind of going flat, the 20s going flat, which kind of shows that maybe we just sit and do nothing, or we kind of move lower where we would have the 50 and the 200s as support along with these fib levels. If we get it and it comes down into 3 and starts to rally again, then possibly it is going to be a diagonal triangle for the minor fifth wave. All yet to be determined. That's where I'm going to finish up for today. So thank you for listening to this particular podcast. And our next Elliott Wave update will come tomorrow on January the 12th. January. What a week, huh? I'm starting off right. On June the 12th.